You gotta love days like today. You only get them once in a blue moon. The market looked like it wanted to rally to the 200-day moving average. Then Powell came out on top of that. He was more dovish than expected, hinted that there could be a pivot soon. The market got so excited, we blew through the 200-day moving average. 500%. If you held even longer, you got almost 2,000% today. Of course, if you were following me, I didn't push that risk all the way out there. That's not really my trading style. But I know that lots of the members made great profits today. Lots of people were tagging me, thanking me. Oh, thanks for the call outs. We got in right before that rally came in, really stuck the contracts here. Some members saying, hey, you saved my account. I'm now back in the green. I am so happy to see it. Glad we could help. Remember, that's what all this content is meant for, is to help you. And the Discord members, I think, are really enjoying being able to see my trades, which I'm also very happy to do. Hey, big wins all around. We can make it $200 a day on a $1,500 account. Hey, that's really good. But now let's go ahead and take a look under the hood and see how the market's really doing. Hey, sorry to interrupt, but if you could please like the video, it would help so much, or subscribe and ring that bell so you don't miss future videos as well. And what you're about to see me use is a program called TradingView. If you haven't seen it before, TradingView is what I do 99% of my charting for the market. If you're interested in using that program, we're actually an affiliate and you could save some money by signing up using the link down below. We could see that there's definitely a lot of FOMO into today's rally. We can see on the RSI that we're definitely in overbought territory. It's also important to note that if we look at trading economics, sorry, that's the thumbnail I was working on, that we do have the PCE data coming out tomorrow. You're going to have ISM manufacturing tomorrow. And although the Fed pivot might seem like it's just a big buildup for more bullish momentum because they're going to pivot, I think the market might be getting a little ahead of itself. Because remember, Powell didn't actually say there's going to be a pivot. That's just the market speculating and then getting excited. He iterated today that there was going to be a pause, that they were going to stay at their target rate of what they wanted. That's a lot different than a pivot. And it should make a lot of investors and traders a little worried about what the Fed sees coming ahead that's causing them to now have this change of stance. Because remember, last time Powell spoke, he was extremely hawkish. And the Fed knows that the tightening that they're doing in the market also has a lag effect. So what we're seeing today is actually what they did 6 months ago. So there's still a lot more damage to the economy that needs to play out. Of course, like we've said in the past, even though the recession might not have the full effects on the economy now, the market's likely to cover really early anyways. So it's really important that we keep an eye on these technicals and see where they really match up with our narrative. And so for that, I just want to point out that right now, based on this rally, even though I'm bullish heading into the end of the year, looking for a Santa rally, it does look like the market wants to pivot. And if you remember last week, we were talking about how I would expect the market to actually need to test the 200-day moving average multiple times before we actually got a full-blown rally. I was thinking it would tap once or twice, 3 times, and then maybe get a breakout, and then we'd get have a steady run up into the end of the month. Because usually the market's climbing a mountain of worry, right? But instead, we got this blowout right through the 200-day moving average move today, and we can see how overbought this really got. It wasn't really a very healthy move. And in fact, I set up some short positions into the close. We actually got blown out here trying to enter, and then we had to reset here. I think I got blown out twice, to be honest. I think I got blown out here, tried to set up a little bit early, saw how quickly it moved there. Then tried to, got out, tried to reset it again, then had to get out and then try to reset again. Remember, each of those times, not really moving much, losing much, right? Need to have good risk management as a trader because you're not always going to be right. So you need to get out when you're wrong, especially if you're in a very short-term trade. You need to say, okay, whoa, this isn't a long-term investment where the price of the company has gone down means that it's just a better purchase. No, this is an options contract. If the price goes down, it means you're likely wrong. You need to get out. So I went ahead and did try to keep coming in with the short positions. When I saw how overbought the market's getting, this can be a little dangerous. This isn't a large position, but I would expect a bit of a pullback or some stagnation into the end of the week. Now, the reason that pullback could come in tomorrow is because of that PCE and ISM data. And I think manufacturing is going to show that it's got a lot of weakness, and that could mean the next year's rough. Now, remember, we're already expecting next year to be rough and for the market to potentially hit new lows next year. I'm still leaning towards that, and I think the Fed pivoting could actually be a signal of how bad it could be. So those are going to be really important to keep in mind. What I also want to point out is how great a bond performance has been. This pullback right here was very healthy. I was talking about this in the Discord. I like to see this pullback. I took right here at this bottom as a moment to go ahead and buy some more. If you remember last week, we were talking about how bonds were running pretty hot. We needed a little pullback like this. We're now in a very bullish momentum stance. If we look on the daily, bonds look very strong. And I think that they could even outperform stocks over the next 3 months. And now let's talk about energy. By the way, if you haven't seen my video yesterday about China, you might want to watch that to get one of the bullish theses for why I love energy so much, as well as a deep dive in what's going on right now in China. Now, when it comes to energy, we actually did pull a short trade, and hence why I have this circled right here. That was actually one of the winning trades that was posted at the beginning of the video from one of our members who also took that trade with me. Made some great profits on that. Energy was just running too hot. We went ahead and shorted it. We've seen a similar pullback right here. There was another short position. Just a short term, right? We're still overall long term on this, expecting a super cycle. Definitely think we're going to hit new highs. 114 target, I think, on the charting that we posted in the Discord. I'm not going to go over that right now. Just wanted to give a short snapshot of energy. Looking very bullish here. If China does decide to reopen, even more bullish, better explanation, like I said on the video yesterday. So let's go over and hop back over to SPY and talk about things on a little bit longer time frame. Now, when it comes to shorting SPY, it's just a short-term trade, right? Over the next month or so, we always see these nice rallies after midterms. So now it's time to talk about what would a top look like. There's a few different ways to look at this. Now, you've heard me previously in reports talk about, hey, this big move that we got today looks like the end of our C wave. Okay, these are our corrective wave patterns. Looks like the C wave is finishing out. Looks pretty much on the dot for what could be a top. And remember, it could extend further than that, which would cause us to need to do some more charting as well. And it could extend even all the way to about the 417 range. Now, if I actually remove this and we say that, and actually remove this and we look at this in a different way, I think this is important. It's a good teaching moment for when it comes to Elliott waves. Now, looks like we have a shorter term, 1, 2, this would be your 3, this would be your 4, and your 5 waves. Now, if we chart this that way, when we use these Fibonacci levels, we have a pullback from here to the 4th wave, and the 5th wave, funny enough, still puts us about the same top range. So no matter which way I'm looking at this, whether this is actually an extension that goes further to the outside, which would likely cause me to get blown out in the short term put position, which is fine, it happens. This would probably then bring us to about the 418 range before we're going to need to see a new pattern form out. And again, I'm favored to this bringing us to new lows. And, maybe even down to the 330 range on the longer time frame, talking about maybe a 6-month time frame for that to really blow over. And then for the economy, I think that could be, what as a 6-month time frame in the market could actually be, 2-3 year time frame for the economy. During this time period, I also do think that people that are just incrementally buying and averaging right now might really struggle over the next few years to really make back all that money that they spent buying this turbulence in the market. Now, if you're avoiding tech and you're in energy, or maybe you're looking at bonds, even if you're a younger investor saying, hey, there's probably a good trading opportunity here because I want to take a more active stance, I think you're going to make out really well. And again, we're still going to make a video comparing active investing to passive investing. That video turned out to be more than I first anticipated when I wanted to do it. I'm trying to do some more research so I can give the most critical analysis and actually be, I have some bias, obviously. So I'm trying to make sure that I actually don't apply that bias when I'm creating this content. Give you the most accurate picture as possible between the comparisons of passive and active investing. So anyways, that video will be coming out soon. This is kind of what I'm seeing for SPY in the long term. We can also go ahead and take a look at trading economics, see what I see there. Coming on Thursday, we already talked about that. Friday unemployment numbers. This will be interesting. Expect these to be strong. Remember, bottom of a recession usually is when these unemployment numbers start to spike. And that usually is the lagging indicator, right? So when we see that unemployment numbers are spiking, usually that's at the tail end of the recession. And usually the market has already recovered by then, but that'll be a good signal for, hey, the bottom's definitely in. On Monday, we're going to get more ISM data. This is the non-manufacturing data. This has been strong. Services have been strong. I would expect that to continue. It seems like a lot of people are saying, hey, goods are expensive, but I still want experiences. And I expect that to continue to play out along with travel, which, Airbnb still would love to see that stock perform in the long term. I think it's going to be a great opportunity here soon. It's been great to trade so far. Let's see here. Coming in the Thursday, initial jobless claims. Again, not expecting much here, but do expect to see that this could easily surprise because of all the job cuts that we've seen. Apple, Google, Facebook. I think it's time for a lot of these smaller companies that have been trying to hold off to likely also report some job cuts, or at least a vacuum start to create in all the job openings that have been available. Of course, we could see just innovation start to take over there. And that's already pushing us into what we're going to talk about for next Wednesday on that report. So doesn't look like I missed anything. So that's going to be it for this Wednesday report. Holy cow. I still haven't broken that habit. I hope you enjoyed this video. Super short this week. Not much to talk about. Covered the news in yesterday's video. Going to do a special video tomorrow as well, talking about how I got to where I am, what I did. I think you'll really enjoy that. So I'll talk to you then.